Okay guys, good morning, good afternoon, good evening from wherever you're watching this video. I am Larry Hughes and my brand name is FX Pathfinder. So this is my first ever YouTube video and I'm here to break down the nitty-gritties for you to be able to make some profits from the forex industry. So here it goes. I'll be deciphering the hidden secrets of the daily and hourly time frame. So forget all those shenanigans of forex gurus trying to complicate trading strategy, different trading strategy, fair value gaps. I'm not saying that those strategies don't work, but simplicity ultimately makes money in trading. Simplicity ultimately makes money in trading. That's Summit. SUMMIT. So I'll be deciphering, like I earlier said, I'll be deciphering the hidden secret of the daily and hourly time frame. First off, what you need to do on the daily time frame, what you need to do, you need to identify the trend of the market. What I mean by the trend of the market. So basically in forex, price makes an upward move, a downward move, and a ranging move. Or in other words, an uptrend, a downtrend, and a ranging market. So for an uptrend, price makes higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. While in a downtrend, price makes lower lows, lower highs, lower lows, lower highs, lower low, lower highs. But in a ranging market, price moves ups and down within a specified range, just basically making zigzag motion in a confined area. So let's go deep into this video. So after identifying the trend on the daily time frame, what you need to do is to map out key support or resistance zones on this daily time frame. What I mean by support or resistance zone is where price makes a rejection candle and bounces off and continues in that trend direction. Like for example, when price makes a higher high and higher low, higher high, coming down to that higher low, you understand? That previous higher high, sorry. When price makes higher high, higher low, higher high, higher low, higher high, price needs to come back to that previous higher high where sellers traded off the market, whereby sellers traded the market down and a rejection candle happens and makes a new higher high. So on coming back to that previous higher high, that place we consider it as our support zone. So just basically know that support zone is just like your floor, while your resistance zone is just like a ceiling. So when price is making a pullback into that support zone, we do not trade the pullbacks. Never you trade the pullback, my brother, unless you get capital and you don ready to blow am. You understand? So on that pullback phase, we do not trade. What we do is we wait for the price to make that those steps downwards until it reaches that support zone. On that support zone, we try to check out for rejection candles on that daily support zone. What I mean by rejection candle is basically your pin bar, your engulfing candle, and your evening or morning star. Your evening or morning star, where price makes for an uptrend, price makes a shows a red candle, then a doji, and a bullish engulfing candle. So until price makes that bullish engulfing candle, which is our rejection candle we are looking for, we only and only then can we scale to the 1 hour time frame and wait for a market structure shift. What I mean by market structure shift is, so on that pullback phase on the daily time frame, definitely you won't see how price or the intimate or let me say the nitty-gritties of the pullbacks, whereby price makes a lower low, lower high, lower. You just be seeing basically long tick candles or minute candles down to the support zone. But on the hourly time frame, you see the pullbacks phase, how price is making lower low, lower high, lower low, lower high, lower low, lower highs. You understand? So market structure shift basically means where price breaks the previous lower high and makes a new higher high. So until price pulls back to that lower high, thereby giving us a supply zone. On that supply zone, we only wait for a rejection candle also as seen on the daily time frame. So when price gives a rejection candle, whereby our rejection candles are definitely our pin bar, our engulfing candle, and our evening or morning star. So in this case, we are looking for a bullish engulfing candle or morning star. So only when price gives this morning star candlestick can you enter, go in for an entry. Then you place your stop loss below, the previous lower low, or you can place your stop loss below the recent higher low. Thank you. So with this, you can minimize your losses and go in for a risk reward ratio of 1:2, 1:4. But me, I basically trade the pound US dollars, that's GBP USD, and my risk to reward is 1:4, with an average risk to reward of 1:2. Thank you. So go in, make some profit, and make some huge amount from this forex industry. See you in the next video. Thank you. Like, subscribe, and follow me. Peace out.